Just in relation to the thesis that you have there, Leith, I think it's fairly robust. You make a solid argument there. Have you considered that you may get some sort of unintended consequences from the policy change in isolation? For example, I've seen the idea that you would have houses no longer become attractive because of the reduction to negative gearing and so forth, and the CGT, etc. However, householders may simply say, well, the best place that I can put my capital, and if the Royal Commission passes over and gain access to continued debt, I can roll that into my own primary place of residence, because of course that continues to be tax effective, and so we see another boom in the debt load, because people want to just lever up on their primary place of residence because it's very tax effective, and then we're off to the races again. I'm just putting it out there.
Basically, these changes to negative gearing capital gains tax, when you look at the housing finance as a whole, it's going to be negative. Obviously, if you change the tax system, make it less advantageous, you're going to have less money overall going into housing. And there might be some who will then put in owner-occupier, but it's not going to offset the fall in investors. The maths just doesn't add up. Unless you change the tax rules to somehow offset that and make owner-occupying more attractive, the overall quantum of funds is going to be less.
Well, you can't make it more attractive. It's free at the moment.
I don't know. Well, give away money, or give away money, or super bribes. That's effectively a tax change.
So you're saying you just simply can't fill the hole, even if that level of speculation?
No, well, I mean, like that'd require just complete change in everyone's rationale on unilaterally from themselves. Want to gear up.
Maybe you could have a construction though. Like that'd probably be the bigger one for me in terms of an upside risk, is if you somehow flipped everything around to just like no tax gains for anyone except people who are building new things.
Well, that's what Labor's policy is.
Yes.
No, not just a negative gearing, but you went, okay, you can only borrow in your super fund if it's going into a new thing, or we'll have a government backing of bonds for new properties, but not for old, or there's any number of ways they can skew to get more government money into housing. And so, but the most effective for me that would change my view is if I was looking at that thinking, you know what, there's another construction, we're going to get another leg up in the construction boom because of all these tax changes. That'd be a fundamental change. Otherwise, it just seems to be whether you manage to keep it up higher for longer but eventually you end up in the same place, or whether you go down first and then recovery. But
yeah, I mean, there's a whole bunch of stuff that can happen which you won't foresee. But I mean, you can only go on what's in front of you, I suppose.
We do have some sort of coalface real estate experts, buyers advocates and the like, that we talk to regularly, and they universally say these reforms are going to smash investors. Like, we talk about modelling it and what have you, but they're there and they understand the psyche and sentiment of the investors, and they are very bearish about its impact. And those investors set the marginal cost, the marginal price of houses.
Especially in Sydney.
Yeah.
And then Melbourne.